What I'm doing over here is basically, and I talked about myself already a lot. So 3 parts, and I think the first 2 are important or hopefully interesting to you. Blockchain, ICOs, and tokens. And a little bit the demystification about this, because the more you read about it, the more negative glimpse and data inputs you get over time. And that's not good. And it's a little bit because it's a young industry. And if you look at the conference here today, it's nice, chaotic, medium well organized, sorry about saying that, but that's a little bit how the industry works for the moment. Is that the right way of doing financial business for institutional investors? No. So I think this is really important on all those conferences to make that a very professional asset class for the future. Make this reliable long-term, the technology underlying before that. So that's really important. The second one is, I tell a little bit about regulations, and Tito was saying that regulation will kick in. And if we have time enough, I tell you a little bit my answers, but I already told that in the beginning. So at the moment, we all, I think, here in the room believe it's a huge opportunity working with ICOs, blockchain as a technology, and all coins associated to that. But at the end of the day, you see a lot of risk associated to that, fears. Only rarely banks touch that matter. We have a huge problem of custodians. If you have an institutional investor, it's like, how should I hold my coins? There's not a solution for that. Rabobank just announced that they will do this on an institutional level. But if you really go to an institutional investor, he has no clue how to hold your coins and tokens. And none of those presentations I've seen before give that answer to that. Just as an example. So why is there a negative perception for that technology? Well, at the moment, there are no KYCs, the identity, there's no AML, the anti-money laundering tests. We have no valuation models of any pre-ICOs. Have you seen any valuation method which makes it plausible for you how much you pay for a utility coin? Question mark. I think you have never really answered that question to anyone if you are in an ICO, nor somebody has answered to you. It's a problem. And we have to learn how to value those asset classes. It's a white paper industry, and the name says it. It's a white paper. There's nothing really a lot on it. It's a concept. It's the early 90s, mid-90s concepts. I have a great idea. I think I want to build a browser. Does it make money? No. Will it make money? No. What is it good for? I don't know. So that's, I'm exaggerating, as you say. There's a lot of people on the street with lack of execution experience. That makes it risky because you put a white paper in front of an investor and it's like, I can execute this in 1 year. Have you ever done it before? No. Have the people done it before? No. Have you run a business before? No. Have you done sales? No. Have you ever marketed shares or utilities or vouchers to anyone? No. So if you are an investor with your own money or even third parties' money, how would you react? Thirdly, questionable marketing activities. It's a social media, I just heard, Google online AdWords business, how you want to reach investors. So translation to that would be it's focused on retail investors. Questionable. I don't see a lot of investor education and risk awareness. It's coming up a little more this year, but in the early ones, it's nothing. There's not even a single page in most of the white papers in 2016, 2017. There will be, by the way, for the founders, will be huge risk once the lawyers kick in when the money has been lost and they sue you civilly on the civil court. They will grab you by the ass. That's for sure, and there will be no caps, there will be no limitations. It'll be interesting to see how that was. So we have the gold rush mentality as in 94, 95. Which is good. So that's, I think, why we really have a negative perception. In terms of, let me put some positive part about it. I mean, and the people are a little bit scared about the technology, because I personally believe it's the biggest revolution happened after the IP, the Internet Protocol, was invented in the middle of last decade, which was only been made for the transfer of information, not values, not identifying the counterparties. Blockchain is bypassing middlemen. It's directly transferring values where the counterparty is been secured, and also the transfer of value, which is revolutionary, which will change our entire life for the next foreseeable future. So the underlying technology is probably the biggest revolution, which we're just at the beginning. Trust through technology. Explain to your parents when they transfer real estate to you that they should trust the blockchain. That's very difficult to get in people's mind. So we have to train, we have to explain, we have to make it more reasonable that this will replace our used way and methods of transfer of values. No AML, I said that KYCs, it's probably always a risk because it also attracts all dirty money in the world. It's unregulated, so you have no clue, any protection of your money, of your investment. Not a good way. And also that it's still a very global retail inflated business, retail investor, consumers and consumers. When it works out well, it's fine. When the market gets bumpy, they're all gone and sue you. So that's kind of difficult. Having said this, you see the kind of the fun parts which happen over here. You may have followed this, the Jesus coin. It's really happened. It's been issued, it's been trading, and it's a promise to forgive sins and fight corruption once you acquire the coin. Aplas, we would say in the Catholic. What's aplas in English? Aplas. Does anybody know what aplas in English is? No. You're not Catholic. Thanks. So we have this situation, which I think is an exaggeration. Coin, you followed. There was a huge hype about this old company, legacy company, issuing a coin on a white paper, which nothing really, I still believe there's not really a business model behind it. But it worked for them, and you see that in January, it was peaking incredibly. However, once the delay already of the timeline of the white paper was being announced, and then you see that a little bit on beginning of February, the stock dropped 40%, or the coin dropped 40%. So you see the sensitivity already in the market for delivering or not delivering your promises. So where do we stand today? Last year, 2007, it was, I think, all of the ICOs I've seen, except of one in the US, was Stellar. The other one were all Ethereum-based, for the good and the bad. Mostly utility tokens also. That's because of regulation and afraidness to securitize that. White papers did do the job. That was all. Probably not, addition to white paper was always a tech description, but that was pretty it. Governments and regulators were pretty much on the sideline and was completely overrun by the young new technology. They couldn't even look at fast as the market has developed. Exchange platforms got more and more hacked, whether in China, whether in Europe, whether in the US, but risks were associated. None of those exchange platforms were regulated or registered with their local regulators. So the SEC, the FINRA, the MAS in Singapore, whatsoever. Big problem, by the way. And banks have completely went on the sideline and shied away and said, we're not even interested to service the ICO. If you do an IPO, the bank does a lot of services for you. Custodian, transfer agent, all those components which actually make it possible to exchange values via a share or a coin. They said, we're not doing it. Even Singapore, and I'm not sure about Japan, I'm really blank on that one. In the US, no one. First one who came up now is a Swiss private bank who offered that service. Can't remember the name, unfortunately, and Rabobank out of Holland. 2018 will be an absolute change, a life changer for this industry. And why? Because I think there are new blockchain technology and forks on the horizon. Meaning, We will have to make a decision whether, and I think you said that before, do we have a proof of work-based technology, i.e. Ethereum, Bitcoin, which basically require mining, and whether you have an open mining or you can fork it, whatever you want to do privately, which requires immense amount of energy. Transactions are mostly slower in terms of per second, or does it move to proof of stake? Guys like Stellar, which take randomly check the likelihood of the righteousness of the transaction. So there are different philosophies, and everybody has one, so I won't share on mine unless you want to ask me afterwards. But I believe we're just at the beginning of how blockchain platforms look like. Ethereum as it is today will not survive. Bitcoin, unless it becomes gold standard, will not survive. So the new forks who will be more efficient can manage more smart contracts per second. So I'm talking 100,000 and above, will probably prevail in the future. And you see that today. Security token to come. I think that's something which we will see first times, asset-backed securities or tokens, that will happen. Legislation is still a little bit bumpy. There are a lot of open questions. Happy to talk about this later on. PPM, private placement memorandum out of the old world, will be worked on in an analogy. Why? Because the risk associated to ICOs will become larger and larger once you see that regulation kicks in. Regulators step in. I think we discussed that. KYC, anti-money laundering, will be mandatory in 2018, no matter where you live. The security stacks increase, and I think that's already taking place as we talk. I think all exchanges will require a license in their legislation. It would be ATS in the US. And the most important thing, which I think will happen, and that's good news, I think it will become more an institutional play. Institutional investors will go into the markets. They will look at certain exchanges which are regulated. The banks are slowly adapting to the business. So we see a lot of things happening over there. Why is that so important? Because the money which is now in the industry will 10 times, 100 times be as intensive once it's an institutional, compliable asset class. Highly important for all of us over here, no matter on what side we are. I know you may know this, that's why I do it quickly. We as a bank, we don't look at crypto coins or the currency itself, because we don't understand the volatility, the betas underlying, the risk underlying to that. If you want to invest in that, that's fine. We don't. However, we make the market more transparent for you as of next month with our API to the key, we analyze the largest 50 cryptocurrencies and put them in 9 decisive global indices. You can have that, your API, for free. Unless you are trading institutional on it, you have to pay a license fee. It's done of our Singapore office. The utility token, this is something which we put a lot of emphasis on. It's the voucher. You basically vouch something to your customer, investor, client to finance an early stage situation. It's a new asset class, and it's a good asset class. We're very, very happy that this actually exists. So therefore, we're very bitchy about the black sheeps building up in the market, screwing up the reputation, the professionalism of decent business models in the utility coin and token industry. The US is a little bit tricky at the moment because they haven't decided whether a utility token will be a security token. If that's the case, you will undergo further and harder regulation. In other countries, Gibraltar, they look at this in a different way. Switzerland, I think, at the forefront at the moment, absolutely understood the concept of seed financing and a new asset class and treat exactly that regulation with the risk-return profile associated to that. So I would probably say, for me, that's the master of regulation for the moment. Security token, digital shares, I believe that's the bright future. And if you think it through, if we can find an efficient way of tokenize fractional ownership of your company, of your goods, of derivatives, of services, we will not have stock exchanges like Deutsche Börse, like New York Stock Exchange, NASDAQ, Eurex, within the next 10 years. They will not be there anymore as of today. It will completely disrupt them. So it will be interesting to see what happens over there. Tokenization, I flipped this over in terms of timing. I'm a big fan of that. We have a lot of issues at the moment, both on the technology side, but also how do we treat this in terms of custodian, work of the transfer agent. It's a bit tricky. I think in the detail you will look into it, but we will solve it jointly. We're testing it at the moment here in Germany, that we are tokenizing a pool of art and a real estate, very small, and test how it feels. How do we hold the tokens? Who do we have to inform once we sell it? What's the tax implication, and so on and so forth. What's the tech stack behind it? Because it's a simple smart contract. So is Ethereum the right one, ECR20, or should we rather go on Stellar and lookalikes, Neos of the world? So what are the markets you should look at if you do ICOs, if you go in that market? I think there's no way you can avoid the US. There's no way you can avoid Russia, because at the moment I think most of the capital is coming out of Russia. But the next one already will be Singapore, which is heavily moving in terms of looking at the projects. The interesting one, which I always liked, is in 2017, ICOs were 3.5 times larger in terms of capital supply than the venture world. And that's big. So it's not going to go away. Even if you guys all lose your money, I think it's a reliable asset class. I think some of the speakers before talked about this. So where should you go? And I have a very personal view. I think, as I said, Switzerland, unfortunately, it's not there because I just copied the Cointelegraph page and they don't have it. They don't think about Switzerland out of whatever reason. They don't like them. And Switzerland would be a green one and very favorable in terms of regulation. The US is probably getting a little orange at the moment as we speak, because regulation is kicking in. Subpoenas have been issued all over the place. And that basically goes the entire value chain. Exchanges, ICOs, servicer, like investment bank like us, need to be regulated. So that will happen. I still believe that Gibraltar is an interesting place to look at. And you will have anything which is Southeast Asia, mainly Singapore, which you can't avoid to look. There is in terms of our business, just for your information purposes, we have around 20 companies coming in on a monthly basis asking us whether we can support them to do a Swiss-American dual listing in terms of ICO. And I think that will probably be an interesting future. Cover the European investors out of a European legislation regulated, and on the other side going into the US. Average ICO size, so 20 to 40 million. I never know why I have this slide. It's actually quite boring. So last part, couple words to the American regulation. And you've seen it's basically Bitcoin and Ether based. I see a lot, 90%, 95% ERC20 standard. I have seen only one Stellar ICO over the last years. They utilize smart contracts, so it's a utility token. Basically, the token incorporates a right, an entitlement. I always tend to say in Germany it's ein digitales Grundbuchamt, so a digital register or ledger, or decentralized ledger. So what's happening over there? And let me just quickly, and then I think I'll leave you with that. So ICOs in the US, and it's very similar also in other countries, it's a private placement, it's not a public placement. And that's very important to keep in mind. You don't want to go into that public placement because that area is going to be highly regulated. Most likely, it will happen that the tokens will be considered as securities. The final decision of the SEC and the FINRA has not been made yet. ICO advisors, and that's probably one of the lines you always have to keep in mind, need to be regulated in the US if you issued coins over there. That means they need to have a broker-dealer license, Wertpapierhandelsbank-Lizenz, security trading license in translation. Without that, if they receive money, it's actually not, you can reclaim it. It's against the law. Already today, there is no way they can talk their way out of it. How to conduct in the US. So you don't want to be treated like an IPO, you don't want to be treated like a security, so you got to go for the exemptions. And there are 4 exemptions in the US, which one is applicable to you, to an ICO. The first one, the Reg A plus, is, you may have heard of it, it's the mini IPO. So you can include accredited and non-accredited investors, but it's always limited to either 20 million US dollars or 50 million US dollars. You have no lockup, which people like very much, but basically it's a small-scale IPO, heavily regulated, which you don't want to do. Because what you need to deliver for that and the cost associated, if somebody proposes that to you, tell them, doesn't apply to ICO, doesn't make sense, don't do it. What you should look at if you are in the US or interested to ICO in the US, it's the D506C. Nice names, the US likes it, they call it in the DS1s whatsoever. It's tailored to ICOs. Why? Because you only do accredited investors, so KYC is in place. You also have the money laundering better under control. It's unlimited, so it doesn't matter how much money you raise. However, the caveat to that is that you are locked up once you are receiving the coin for 12 months. So it's a typical lockup in an ICO, so you cannot trade it easily away. The good news is you can freely market, unless the Reg A plus, for example, you cannot openly market your ICO. That's why it's not applicable. You cannot go social media. You can only put a tombstone and an information into one of the main stock exchange newspapers. That's all. On the D506C, you can use all your marketing efficiency which you have learned and which you have been advised on. So ideally for you, the only thing which works. There's another one which some people may tell you. It's called the regulation CF. It stands for crowdfinancing. That usually is really done for small issuance in the crowd world. So you're limited to a little bit more than $1 million US. You have a lockup of 12 months. And each individual investor needs to have a certain income/net worth. And of this, he can only invest maximum of 10%. So you have to provide the proof to the FINRA and SEC what investor class you are marketing, which is very difficult for you to provide, particularly the work for 1 million of your raising. So it's a no-go for you. The other one, it doesn't really make sense because it's regulation S. That's basically, you would combine that if you want to raise money with foreigners. But I give you the solution. If you look at the US and you find a lot of investors, and particularly events, efficient events like this, where you can market your business, you should consider a dual listing. Go Switzerland, go Gibraltar, US. Go Singapore, US. Where do you think are the most investors? So you just do a dual listing. And then forget about Reg S and any other exemptions in the US. So for me, I'm done over there. I told you our answer to that is threefold, and it's very quick. We have an ICO practice in Singapore, happy to help. We also do the transparency, which is the crypto index. And you see over here, we have cut the crypto market, the top 100, in different parts and brackets. That's the Singapore desk, because you see where do the ICOs happen? It's United States, Switzerland, and Singapore. So keep that in mind. Why is that? Because these are the most friendly countries in the world at the moment to provide capital and that asset class to you. And last but not least, Gianni Soletti, who is heading our San Francisco office, does the ICO practice. He's a broker-dealer. We have a broker-dealer license over there. So we're all in compliance with the FINRA and SEC. Last but not least, our blockchain fund. It's a seed pre-ICO fund. It's 25 million, it's small, US. Gianni Soletti, who is the ex-head of corporate venture capital of Hewlett-Packard, who has been a long-term entrepreneur. He writes a hell of a lot of books and is an he's a blockchain freak, and early on. So we look really at companies where we are interested in the protocol design. We're interested in the decentralization of the business model. We're interested whether the team is institutionalizable, whether institutional money will go in over there. But ping me on LinkedIn if you want, or at sh@ieg-banking.com. If you have any questions, you'll find me, I'm very sure, and talk to me. Back up, nothing more, thanks.